Welcome to today's 24-hour global financial update. Today's focus. The latest U.S. August PCE data is out. The results show inflation remains sticky and consumer spending is surprisingly resilient. For the Federal Reserve, the pressure is truly overwhelming. Let's look at the key numbers. Overall PCE price index up 2.7% year-on-year. Core PCE up 2.9% year-on-year, almost a full percentage point above the Fed's 2% target. What does this mean? Inflation is still stubborn, and price pressures haven't eased. PCE divides consumption into two main categories, goods and services. Right now, there are two engines pushing inflation higher. One is services, especially the so-called Supercore services like dining, transportation, and healthcare. These are tied to wages. The other is goods prices, which are rising because tariffs have increased the cost of imported goods. What is Supercore inflation? Supercore inflation excludes housing costs and focuses on prices for labor-intensive services. In August, the biggest increases came from financial services, dining, and transportation. Why did financial services rise? Because the stock market performed well and management fees went up. This metric is important because it shows whether wage pressures are spreading into overall prices. In August, goods prices rose 0.9% year-on-year, faster than the 0.6% in the previous 2 months. The reason? New tariffs. And 2/3 of those tariff costs were ultimately passed on to consumers. Even more surprising, after adjusting for inflation, real consumer spending grew 0.4%, much stronger than market expectations. But this growth was mainly driven by high-income households, while low-income groups are under significant pressure. Meanwhile, the savings rate fell to 4.6%, meaning many people are spending more than they earn and dipping into savings. Another highlight, Q2 consumer spending growth was revised up from 1.6% to 2.5%, and the average savings rate over the past 2 years was also revised higher. This means U.S. consumers are in a stronger position than previously thought. In short, inflation hasn't cooled, and spending remains strong. What will the Fed do next? Raise rates again, or keep them high for longer? What do you think? Will the U.S. economy have a soft landing or a hard landing? Thank you for watching today's market news. If our information is helpful to you, please hit the like button and follow for daily global market insights. We'll see you next time.